Hey traders and investors, it's Serge Berger here. I want to go through the gold miners again today, particularly the GDX. It's something that we've been trading quite actively, for the lack of a better term, and very successfully though so far this year already. The GDX in the Steady Trader Trade Alert service. So I want to quickly revisit it. It's something that I continue to see very good probability setups, but I think it's important that we look at more than just the actual price action of the GDX and understand a little bit more what's going on. First of all, of course, the correlation between gold and the gold miners is very high, so you want to look at gold and see how that stuff moves. And you can see gold actually today, as I'm recording, has gapped up past a very clean line of resistance and back sort of above its 200-day moving average. This is the GLD, okay? And these are better reference areas than sort of absolute areas where you have to really hit them hard. But you can see this is a pretty decent chart. We got a higher low here in early January. Which led to a quick blowing through all the moving averages here and finally past the resistance line. So from this point of view, maybe gold is a little bit overbought here, but the trend here is pretty good. If you look at it from sort of a multi-year perspective, you can see that this final cascading lower in November may have been exactly what was needed for gold to stage a better rally. Look at this; it actually ended up breaking below these lows here, and that was kind of what has finally then um, moved gold higher. It's what they say, from false moves come fast moves. So maybe this was a false move and a fast move higher. So that's what's going on in GLD. Also, I think it's important, you got to really keep in mind what's happening in the dollar. And the dollar index tends to, through a multi-week, maybe multi-month correlation, have an inverse correlation to the commodities, particularly gold and oil, and that's just because it's those things are priced in the dollar. So, but keep in mind what the dollar's doing. So I would suspect certainly if and when the dollar takes a breather, that gold could get an even better jig. So let's go at the gold minus GDX. This is really what I want to talk about today. And you can see from a technical perspective, very much like gold, it did have this cascading lower here in late October, early November, and finally, after basing down here, making a higher low, to GDX has now released higher, broken past back above this support line, and is sort of consolidating here the past days, and this still looks to go higher. So the thing with gold and gold miners is the first like 20 or so percent, or 30 or 40% for that matter, it can happen very quickly. So if you look at the price action so far, this thing's already rallied like 30%, right? So, I think that happened pretty quickly. So can it rally another 10 to 20% pretty quickly? I suspect so. Okay, so just keep that in mind on the GDX. Also look at gold, look at the dollar, look at what's going on also from a structural underpinning, with the shenanigans you saw with the Swiss National Bank this morning. That kind of stuff and uncertainty tends to be fairly good for gold, and by extension to gold miners for a decent multi-week trade. Hope this makes sense, guys. As always, you got any questions, you can hit me up on Twitter. My Twitter handle is SteadyTrader. Otherwise, you can go over to thesteadytrader.com and sign up for the daily trade alert service, which is going very well.